Welcome back to the show. Joining me this week for the very first time, finance legend and fellow podcast host, Grant Williams. Grant, I've been listening to you for a long time, been getting your newsletter. I love your work. Thank you so much for taking the time to join me on Coin Stories.
It's a great pleasure. I don't get many invitations from your world, and so it was lovely to meet you in Vancouver, and even nicer that you invited me onto the show. So thanks for having me.
Well, it was really interesting to hear your presentations at the conference we were both at. I want to dive into a little bit of what you talked about with regards to gold and all the risk underlying our system right now. But let's start this all the way at the beginning. People know that's kind of how I start my shows, especially with new guests. So tell us a little bit about where you come from and how you got to be where you are. I mean, 35 years in finance, right? Advisor for many, many firms. And now you have this amazing outlet of your own.
35 is a bit out of date. It'll be 40 next year, which terrifies me. But yeah, I know. I literally realized that this morning when I was going through some stuff. I was like, oh my gosh, it's 40 next year. So yeah, it was. It's been a long time, and it's something. This business amazingly was always something I wanted to be. I didn't really know what it was that I wanted to do in it, but it was something that interested me. Mainly because I spent some time as a kid around some characters that were in this world, and I just found them to be just such interesting people. They were adults and I was a kid, but they were full of life, and they always seemed to have a story to tell. And they were, all the parents were laughing at their jokes. And I just found the whole thing, I just found them to be really interesting people. And that was kind of the world I wanted to be in. And I was fortunate enough to inveigle my way into that world. Through kind of sheer persistence more than any great talent, and it's just been a wild ride. I caught the Japanese equity market bubble, and so that kind of was my first experience. I had the Black Monday '87 crash. That was like a year after I first started trading my own book, which was a wake up call. I was in New York for the .com bubble and the bursting of that. I was in Asia for the Asian crisis. So I've been kind of in and around various crises my whole career, and it's been fascinating to watch them. And you like to think that you learn a little bit from each one. And I would think that being around the ones I've been around, and particularly the times they came in my career, have probably colored my attitude towards risk. More than perhaps people whose exposure to the markets began in the last, say, 15, 20 years. Absent the financial crisis, you've been encouraged and rewarded for taking on excess risk. And so, I certainly didn't have that background in my career. And I really do believe that those formative experiences color your attitude to these things. So it's been fascinating to watch it all happen. It gets more fascinating with each passing day, and with the stuff that's going on now. I've seen some wild things in my career in all kinds of different areas and different countries, but the kind of general euphoria that's happening now, and the kind of the rising tide that's lifting so many boats, and the pure FOMO is a whole other level to me. I find the whole thing fascinating. I'm for the most part sitting it out because I just don't like the risk profile of it, but it's fun to watch, I have to say.
I would imagine that a lot of people enter the world of finance and they're bright-eyed and they assume that there are free markets. Maybe they don't see all the manipulation underneath. Maybe they have a different outlook on why we've had crises than when they have so much experience. Can you talk a little bit about your evolution? I mean, seeing one crisis after the next, and also the government responses, especially after the great financial crisis, how that was, it put the economy on steroids to a degree that I think most people could never have imagined. And now we're seeing the consequences. I mean, talk to us about what you learned in all your experience.
That's such a great question, Natalie. And I think the first crisis that you go through, and maybe the first couple, I'm not sure, you're so blindsided by what happens that your focus gets very narrow. For me, it was my trading book. It's like, how do I get out of this mess? Because this is a mess, and how's this going to work out for me? And so I don't think you particularly pay attention to the measures that are taken to remedy it. Certainly not in a 30,000 foot view, looking at the overall steps that are taken and where they might go wrong. You're just relieved. You're just relieved that somebody is coming to the rescue. And so, there are people who spend their entire careers in finance and don't ever take that step back to see the overall picture. And there's just this relief that either the government has my back, the central bank has my back, or even the fact that I got saved. It doesn't necessarily, some people don't even make the connections with why they got saved. They're just glad they did. So, for me, it was a process. 87, I had no idea what was going on. I'd been trading a book for a year and was completely blindsided. So I just watched the people around me who were much older and more experienced than me, and I watched how they handled it. And I tried to pretend like I wasn't freaked out and try and remain calm on the surface at all times. But it was a harrowing experience. That was a wild time. And October 19th was a crazy day. People can't even conceive a market that could go down 22% in a day. The circuit breakers and stuff are put in place now, so that can't happen again. The second crisis I had, I guess it wasn't really a crisis, was the bursting of the Japanese equity bubble. And again, that was very different. It was sparked by rates being raised, and the market stopped going up and started going down. It wasn't, as I remember it, there wasn't a day like October 19th, 87, where the market crashed and it was all hell broke loose. It was just a gradual understanding that the market that we had become so used to going up every day was going down most days. And then, gradually people started bailing, and a whole new mindset got put in place. The 2000 bubble, at that point I'd been in the markets for 15 years. And so I felt like I had a much better perspective of that one. I felt like I could see what was happening. I understood, based on what I experienced in Japan, the overvaluations that we were seeing and the kind of crazy behavior. And I was able to be aware of more anecdotal stuff. I've told the story before, but I remember being in the cafeteria at UBS in New York when the bubble was bursting, and there was a day when I can't remember if it was Lucent or Cisco, one of those big high flying stocks had taken a big bath. It was down 20% or something. And one of the guys in the queue for the cafeteria in front of me was talking to his buddy, and he said, "Oh man, you saw Lucent's down 20% today." And his friend just dropped his tray and said, "Oh man, this is the buying opportunity I've been waiting for," and kind of literally dropped his lunch and ran back upstairs so he could buy shares in Lucent. And you see that kind of stuff, and you realize what's going on here. There is a market direction, and there is human emotion, and they at the turning points they absolutely crash into each other. So I felt like I got a better handle on that, and that helped me with 2008, which I was more than prepared for. Probably too early, but I could see what was building up there. And so I think the more of these things you go through, the better you get at spotting them, and the better you get, not necessarily of navigating them, because that's a very difficult thing to do, and each one is different in nature, but of stepping out of the way in time. And the other thing that I think you learn as you get older and you get more experience and you have more of these under your belt is the idea of stepping out of the way too early is one that a lot of people will say, "Oh yeah, you missed the last, you missed this, you missed that." But the only way, the more comfortable you get and say, "No, I'm fine. I've done what I've done. I've made the money I'm happy making. The risk for me at this point doesn't match up, so I'm happy being aside." So it's a process. You learn something with every crisis, and you have to make sure that you don't make the same mistakes twice. That's the key, I think.
Coin Stories is brought to you by Bitdeer, where the power of Bitcoin mining is at your fingertips. As a publicly traded leader, Bitdeer's global reach and scale means they're everywhere you need them to be, ensuring you're part of the thriving Bitcoin economy. Bitdeer's not just mining, they are industry pioneers, and Bitdeer stands alone as the only vertically integrated, technology-focused Bitcoin mining company. What does that mean? Well, they're not just deploying, but developing the latest tech to make Bitcoin mining more efficient and effective. With the industry's most experienced leadership team, innovation is in their DNA, and it shows, with a quarter of their workforce dedicated to research and development, pushing the boundaries of what's possible in Bitcoin mining. And now they're leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. Well, it seems like with every crisis, we just add more leverage. Why do we keep having all these crises. Can you kind of break that down for people, especially folks that maybe aren't as expert in terms of their financial knowledge or monetary history? Why do we keep having these crises, and how can we finally maybe avoid them?
Well, I think you have to go back. There's a great quote from Homer, and I'm not talking about the guy who wrote the Iliad. I'm talking about Homer Simpson, and and I will switch out. He used the word beer, but I'm going to use leverage. And his quote was, leverage, the cause of and solution to all of life's problems. And that's basically where we are. There's no more apposite quote than that, frankly, because leverage got us into this mess, and leverage is what gets us out through cheap credit. And so we're in this part of the cycle where the only solution that can be applied is to, supply more liquidity, lower rates, allow people to take on more debt to roll over the debt they can't pay off. And it works until it doesn't. And none of us know when it's going to stop working.
Right.
But history is replete with examples of similar situations, maybe not the same, maybe not to this extent, but they all end the same way. And this one will too. And so right now we're in that place. And look, I think COVID and the response to COVID has extended this cycle even further with the massive fiscal stimulus we saw alongside the monetary stimulus. So we're in that period where the imbalances are just too great. And now with the deficits in the US, the Congressional Budget Office forecast going out to 2025, it's a mess. And it's an unsolvable problem without massively lowering the cost of money. And that's been possible until recently, because now we have inflation. We're doing this on a day when the PPI numbers came out much hotter than people thought. The predicted / relied upon interest rate cuts that were being telegraphed are getting pushed further and further towards the back end of this year. And so, sooner or later, the rubber's going to meet the road. And all the time you want to, FOMO, NVIDIA and SMCI and all these crazy things, it's absolutely fine as long as you realize that there will be a very bad day. And you just have to make sure that bad day doesn't cost you all the gains you've made dancing on the edge of the razor. That's the trick at this point, frankly.
Well, I want to dig into some of that because you're right. Every time there's a crisis, they have to come in and stimulate and intervene. And every time they have to do it with a lot more money, right? I don't think a lot of people expected the amount of trillions that would go into the system. Yeah. Obviously, for the first time, we got inflation in the form of CPI as opposed to just asset inflation. But it is crazy to see how decoupled things are from reality, from underlying fundamentals, from actual earnings. We're back at all-time highs with the stock market. So what do you think is going to happen? Because I'm getting the impression that everyone has been lulled into this false sense of safety that, well, if there is a crisis, they're just going to come in and print. And if you have assets, that's actually really great for you, right? So, I mean, the people who have assets are benefiting from all of this, especially over the long run.
Well, look, it's a great point, and it certainly has a lot of validity. But the one thing I would say is, if you look at the particularly commercial real estate market, for example, those are some big assets that are really struggling right now. And you go to places like Germany, you're seeing residential real estate problems. So the idea that assets all go higher has been absolutely true. But we're now kind of reaching the point, I suspect, when the next round of stimulus, the next round of cheap money doesn't necessarily lift all assets higher, because some assets are much more complicated than others. And real estate's the perfect example. Particularly against the backdrop of inflation. So this next time, it may just be stocks and bonds and NFTs that go higher. It could well be that, right? It could well be that. And whereas real estate, it's not such a simple in and out. It's not just a simple, hey, just buy this, it goes up, you flip it.
It's very
it doesn't work that way anymore. Yeah. So there will be another attempt to throw more cheap money at the problem. I just think anyone who thinks I can own anything and it will just get caught up in the rising tide, it's time to be a little bit more selective in what you think is actually going to respond. And it will be the least complicated things.
Well, everyone who follows you knows that you're a gold bug, and that was what your presentation was about that I watched in Vancouver. So let's talk a little bit about gold, because we're seeing record buying by foreign central banks. They're selling their treasuries. They're allocating more to gold. People are just in general, it seems like, looking for alternatives to the dollar. So can you give us a lay of the land when it comes to that, and why is gold a good investment in your opinion?
Yeah, where to start with this? First of all, let's define gold as an investment, because I tend not to think of it like that, and I that was kind of one of the messages that I wanted to get across with this thing. For me, an investment implies to me that you're buying something because you think the price is going to go up and you're going to sell it for a higher price. And I don't think of gold that way. I've held varying percentages of gold in my portfolio since the early 2000s, when I looked at the response to the dot-com bubble and figured that the devaluation of the dollar was going to be the means through which they kind of remedied this thing. So that was when I started buying gold. And at various points in that time, I've had between 5 and 40% of my portfolio in gold, and I will adjust that and up and down depending on what I'm seeing elsewhere. And I hold that gold as a liquidity reserve and a store of value, not really as an investment. I'm pretty confident that over extended periods of time, I'm not going to lose my purchasing power holding that gold. So that's number one for me, is I want to own something that I can convert into other assets that's going to maintain its purchasing power. I know the dollar's not going to do that. And history has borne us out. It's borne that out repeatedly over just about any time frame you care to look at. And I also want something that I'm happy to hold until I find something that I want to hold more. And it's really as simple as that. And I've talked about this at length. And the example I always use is there's two actually. One, I use Sydney Harbour real estate, because it's one of the most insanely overvalued assets on the planet. And I make the case that if you have a safety deposit box filled with gold, that right now, would get you halfway to owning a harbourside property in Sydney. If there's a property crash in Sydney and those prices come down, that same safety deposit box of gold, assuming it maintains its purchasing power and the housing market falls, you might reach the point where you can exchange it for harbourfront property in Sydney. And at that point, it doesn't matter what the gold price has done. The gold price may have gone down 10%. But if house prices have fallen 65, 70%, you can still afford to exchange that gold for the house you want more. And at that point, I wouldn't care what the price was. If that same safety deposit box full of gold will buy that house for me, I'll exchange them. And the other example is units of the S&P. And we saw this in 2008 when Bear Stearns went under and gold, which had been on a tear, suddenly collapsed. And everybody says, well, gold's supposed to go up in a crisis. But if you looked at what your gold would buy you in terms of units of the S&P, at the peak gold when it touched 850 or 900 right before it fell, and you look at it after it had fallen 15-20%, you could still buy double the units of the S&P with that gold. So it's just a way to hold your reserve in something that will maintain its purchasing power, and you can exchange for assets that you want to hold more for the long term. For me, so that's the way I think about it. And I try not to get wrapped up in the price. It's what will those ounces of gold bring me if I want to exchange them for something.
And so why are central banks buying more gold? For a while, it was reserves were going down, and now they're going in the opposite direction.
Yeah, this is a really important thing to understand. I think central banks, particularly in the West, these enormously debt-fueled economies in the West have eschewed gold for a long, long time. The central banks, they just haven't felt the need to own it because the US can print and spend. Why do they need to own any gold? That's not been the case in Asia and in developing markets. They've always understood the value of having gold. But something really important happened in February of 2022 when the Russians invaded Ukraine. This was the turning point, because the response from the US Treasury, not the Fed, the Treasury, to freeze Russian central bank assets, which were held in dollars, to freeze hundreds of billions of dollars of Russian assets, meant that every single central bank in the world had to completely rethink its reserve policy. Because you can be on the right side of the Americans right now, but there is no cast iron guarantee that you will be going forwards. And so you cannot afford to take the chance that at some point you're going to disagree about either some policy, some war, something, find yourself on the wrong side and have your reserves frozen. So at that point in time, every central bank in the world, whether they are tenuous allies of the US or really staunch allies of the US, as a matter of national security, had to reevaluate their reserve policy. And the simple truth is, as soon as you do that and say, okay, where are we vulnerable? You are vulnerable if you own dollars, because the SWIFT system and the way it's been weaponized by the US over the last 20 years or so proves that if you own dollars, you can be shut out of the international financial system, particularly with most commodities, vital commodities traded in dollars. And now you can actually have your assets essentially confiscated by the US. So whether you like it or not, whether you're a friend or foe of the US, you have to find a way to reduce your dependence upon the dollar, the SWIFT system, and the US. And the easiest way to do that is to exchange treasury bonds for a neutral reserve asset, which is gold. And so that's what they've been doing. They bought over 1,000 tons in 2022. They did the same again in 2023, which are historically enormous numbers. And I see no reason why that won't continue going into 2024. And obviously this is a Bitcoin focused show, and every time I say the word gold, I'm sure everyone listening to it is substituting it for Bitcoin, and that's perfectly fine. It's perfectly fine to do that. The principles are very much the same. And so having an alternative has never been more important in my book.
Well, a lot of people watching this and listening, they might own gold too, or they appreciate gold bugs because you're right, the principles, it's the hard money component. But one thing I did want to ask you, I mean, one of the reasons why Bitcoiners are excited about this new technology is it has the properties of gold, but it's more portable, it's more verifiable. And so in this multipolar world that I think we're moving to, where countries don't trust one another, and it isn't as easy to audit, say, the central bank reserves and gold, and you certainly can't transport it easily. What do you think that means in terms of people seeking alternatives? And do you think that gold could serve as maybe something of a basket or within a special drawing rights to create these new currency swap lines? Or do you think we could potentially move to something even more alternative, which would be digital and potentially something like Bitcoin?
Yeah, look, I always kind of chuckle when I get labeled a gold bug. I don't think I have that kind of crazy fervor, and I chuckle when people call me a Bitcoin hater. I don't hate Bitcoin at all. I totally understand the case for Bitcoin. I've said in the past it's just not suitable for me because I feel it's more speculative and more of the interest is focused around the price. But it does the job. The only thing that Bitcoin doesn't have that gold has, which for me is important, I understand why it isn't for a lot of other people, and that's a 6,000-year track record. Mm-hmm. That's all. That's the only difference for me. And there may come a time when I've watched Bitcoin go through confiscation, and I've watched Bitcoin go through network shuts, and I've watched Bitcoin go through all the things that potentially could render it a problematic thing to own. Once I see how it handles all those, I'm absolutely not against holding my liquidity reserve in Bitcoin. Mm-hmm. But right now, I don't know how it's going to respond. I don't know what will happen if the government decide to crack down. I don't know what happens if we have electronic outages. I just don't know. And so if it was a speculation for me, that's one thing. But if it's something that I hold my liquidity reserve in, that's too big a risk for me to take, frankly, with that. So I'd rather stick with something that I know how it behaves, I know how it responds, and I know roughly what I can expect to happen under extreme circumstances. But look, I absolutely understand the case for Bitcoin, and I say it's just not suitable for me, but I can see why people are so enamored with it.
Okay, well, maybe we'll come back to Bitcoin, but I do want to ask you a couple more questions about the dollar. One thing that I saw at the conference we were at, this ongoing debate of when will the dollar finally fall, and there's the dollar milkshake theory, and some people say, it's so entrenched and underlies the entire global financial system, and 80% of transactions are conducted in the dollar. Most debt is denominated in the dollar. So it's got, some decades potentially to go. Others say it's almost imminent because we've printed so much and we're going further and further into debt. And now there are alternatives. So what do you think about that? I mean, how much time does the dollar have? Because if you look at history, every fiat currency has failed.
Yeah, it's an impossible question to answer, right? Because the question of how much time, none of us know. And I think you have to get away from that in terms of either saying it's imminent. I feel like it's inevitable, as you say. It's happened every other time we've had a fiat currency, but is it imminent? Probably not. But the important thing is, if you're paying attention, this is a very slow moving problem, but you can see the direction of travel now, and that's indisputable. And for every person who holds up a story about why the dollar is going to go away, there is a credible argument on the other side about there is no alternative, and that's true. But it's very difficult to argue that the dollar's days aren't numbered. We just don't know how many days there are. So watching it gradually be kind of pushed aside where possible. And I think this is the big change, is that now the mindset has changed amongst a lot of the countries who've been big supporters of the dollar, to whereas before it was there is no alternative, now it is help me find any credible alternative and I will take it. So it's a very different mindset. Before they couldn't be bothered to look and they just carried on because they assumed nothing bad that could happen. After the Treasury froze the Russian reserves, they're all looking now. And so I think the direction is set. I think the problem we have now is the pace will inevitably pick up because the US is so indebted and the deficits are so large now that every single dollar that is not purchased in Treasury bonds by overseas buyers has to be bought now by the Fed. And so the more people step away, it counts double on the other side, because not only do they have to replace the bonds being sold, they've got to find a new buyer for that incremental dollar. And so I suspect it'll pick up the pace, but that's not to say it can't be another decade before this thing goes away. The end will come very quickly. But between here and the end, it could be years. I think you just have to be on the right side of history and understand the direction of travel, and look at alternative reserves for you individually. And for some people that will be Bitcoin, for some people it'll be gold, for some people, depending on where they're based, it might be euros, it might be yen, it might be, there are other alternatives, and everybody needs to do the thinking required to understand what their best alternative is.
Well, you made great points earlier about gold's track record at retaining purchasing power, but I want to talk a little bit about its performance. I mean, when the financial crisis, the most recent one, happened and they injected all the stimulus in response to the pandemic, I thought that gold would actually perform a lot better, but it's really in the stocks that you want it to be, especially if you got in at the low when everything sort of took a real dive in 2020. And I'm curious if you could, let's rewind time back to the great financial crisis. If you kind of saw it coming and you knew that there was a lot bubbling under the surface and you allocated to gold before the great financial crisis as opposed to stocks, where would you be today? And if you allocated to gold before 2020 versus stocks, where would you be today? I mean, has gold underperformed? It's time for another quick break to hear these messages from my partners. Next up, Bitcoin 2024, the world's largest Bitcoin conference, is coming to Nashville this year. Come join us for 3 amazing days of keynotes, panels, networking events, and my Women of Bitcoin brunch. The Bitcoin conference is where I launched my podcast almost 3 years ago. You never know what can happen or who you can meet here. Head to b.tc/conference and use the code HODL, HODL, for 10% off. Next up, CrowdHealth. Health insurance costs are sky high, and it's money that feels wasted if you don't need a doctor. By crowdfunding healthcare with other Bitcoiners, I get to avoid traditional insurance fees and support real people instead of mega corporations. CrowdHealth also works to reduce your medical bills, so the community's contributions cover more. Imagine spending just $100 a month on healthcare and investing the rest in Bitcoin. If you're interested, visit joincrowdhealth.com/Natalie. All right, back to the show.
Well, in fact, I put a chart in there, and I'm just pulling it up in front of me now. So going back to 2000, which is, I say, for me, that was when it became clear that the response was going to be to debase the currency. It became clear to me then. And I think, basically a quarter of a century is a pretty decent amount of time to look at performance. And there will be people who accuse me of cherry picking. That's totally fine. This is my time frame of owning gold. And if you bought gold in 2000, it has returned 660% to date, which is a great return. If you bought the S&P that same date, it's returned 270%. So
oh wow, okay.
And the Dow Jones 240%. Even if you bought the total return S&P, it's 460. So you're 50% outperformed owning gold over that period, without the stress of market crashes and what have you. You just put this rock in a safety deposit box and you leave it there, and over time, you've outperformed really well. But again, it's just increased your purchasing power. You could, if you wanted to, you could flip all of that gold into units of Nvidia today and see how you get on with that. But but coming back to your point about the mining stock or the performance of gold, if you look at what it's done in all these different currencies, the average CAGR of gold over that 23-year period in dollars is just shy of 10%. It's 10% in pounds. It's 9% in Aussie dollars. It's 9% in Canadian dollars.
That's
It's
the
10% in
annualized
the
return.
yen. Yeah, which is great. In a period which essentially annual returns have been zero at
Mm-hmm.
best, it's performed really well. And there will be a time when you don't want to own gold. There will be a time when you don't need to own gold. You didn't really need to own it in the 90s, and that's when we saw the central banks selling gold hand over fist. You didn't need that safety protection because we had balanced budgets in the US thanks to Clinton. We had real interest rates. We had an equity market that wasn't overvalued until the end of that decade. There weren't as many reasons to own gold, and so that time will come again, but it will be after the massive buildup in debt has been rectified, which will inevitably come through either high inflation or a lot of defaults. Neither one being friendly for people who own certain assets.
How has gold performed since 2008 and then since 2020 compared to, say, the S&P? And obviously now a lot of people are familiar with like the Magnificent Seven and NVIDIA. It's all just, I mean, it's going through the roof. Everything else is pretty much still near what the lows in 2020 or 2022, I think. So what's happening there?
So since 2008, so even in 2007, in the blow off top of the equity markets, gold was up 31% in US dollars over that year. 2008, it was only up 5% because it done a lot of that running, obviously in 2007. 2009, it was up 25%. 2010, it was up 30%. 2011, up 10%. The two down years we've had were 13 when it fell 28% and 15 when it fell 10%. These are all in dollar terms. Absent that, those two were pretty bad years, but we've had 1, 2, 3 years of 25% plus gains. We've had 1, 2, 3, 4 years of double-digit gains. So it's averaging 9.3%. So it's done really well, with a lot less stress for me in terms of, as I say, just if you've just had it there to protect your purchasing power, it's done that and more. And at any point during that period, you could have just flipped it into if you wanted to buy European government bonds when they were so oversold back in 2011, exchanging your gold for some European government bonds was a great thing to do. Same with real estate. If you wanted to exchange your gold for real estate at the bottom of the market in 2008, it was a terrific exchange you could have made there. So again, it's just a way of thinking about it. And I think once you shift your mindset to understand that everything isn't about the price. We get fixated on prices because that's what we look at when we check the price. Have you checked the price of this, the price of that? And coming back to your question about gold's performance since COVID, again, the price, people say, well, I would have thought gold would be much higher. And that's arguably correct. But if you look at what's happened subsequently, and you look at the fact that people are talking about gold getting set for a run here, and it's trading plus or minus $2,000, which is always the ceiling for many, many years, you can see how things have changed. Real interest rates, positive real interest rates is a massive headwind for gold. So seeing what's happened, the fact that gold's stuck in there over this last year as we've seen that shift in interest rates is important. There are many different signs that you need to look at away from the price to understand what's really going on. And again, I would counsel anybody who's thinking of buying gold because they think they're going to make money on the appreciation of its price. Don't do that. If you think that's going to happen, buy gold mining stocks, because if you think the gold price is going to be what it does for you in terms of increasing, you'll make far more money buying carefully selected mining stocks than you will gold. But if you're worried about the loss of purchasing power and you're worried about holding your money in something that is not going to erode over time deliberately on the part of central banks, then gold's a tremendous thing to hold, as it turns out is Bitcoin.
It's really interesting because it seems like with the government interventions and stimulus that a lot of the attention has been placed on stocks, and some of them, if you picked the right one, you're up in the multiple 1,000% in terms of appreciation. But I love the way that you're framing it of gold retains your purchasing power. It's that savings technology, and it doesn't carry the risk that a lot of these companies ultimately have, even though a lot of people do passive investing through the indices. A lot of people in the space, especially in Bitcoin, we say our financial system is broken. The money is broken. What do you hear, or what do you think when you hear that statement? And do you agree?
I agree 100%. Yeah, I agree 100%. The system's been broken for a long time now. And the
How would you
system,
define the brokenness?
well, let's talk about money. Money has to have value. And there is very little value in what we call money anymore because it is and has been reproduced at will in the trillions of dollars. Um, and that's going to continue and get worse slightly before it gets better. And so, if you want to store your savings in something that is a repository of value, we would tend to do it in money. People keep money in their bank accounts and earn a return on it, but that has been taken away from them. First, through the culling of interest rates and the removal of the ability to earn money by holding onto your savings, and that was very deliberate because, as Bernanke said, we want people out there taking risks. We want this money circulating. Velocity of money would suggest that hasn't worked out very well. And secondly, through inflation, and whether you want to believe the CPI, which I don't really think anybody believes that anymore. We all understand that every single adjustment to the CPI calculations has resulted in a lower CPI. We know that the game is to make the CPI as low as we possibly can because of all the payments linked to it. Obviously, that's coming in and biting them hard now. But again, that was inevitable. So money is broken. You work and your savings, which you should be able to invest with as little risk as you want and provide you with a return that will eat away inflation for you. You haven't had that luxury. So people are now starting to understand what's happening. They're now starting to question what they've been told, whereas before they would blithely accept CPI statistics and say, well, inflation is only 2%. We're seeing this now in the wage negotiations. People have finally had enough, and they're starting to demand the kind of wages they need to compensate them for real inflation versus headline inflation that they're being told. And that's a very dangerous moment because these wage price hikes don't go down again. You can't give someone a 40% pay rise and then find out next year inflation's better, so take half of it back. So we're going to give you a 20% pay cut this year. It doesn't work that way.
Right.
So we're at the point where this inflation is going to get sticky, and the market has gambled everything on the Fed are going to be forced to cut.
Yep.
And they may well be, but it won't be for good reasons, and it won't necessarily mean the markets go up. Generally speaking, that first cut comes at the end of a cycle, and it's historically not been a good time to own equities. We'll see this time. But already you look at the Magnificent Six. Tesla has well and truly dropped out of that now. You look at the Magnificent Six versus the rest of the S&P. You look at it versus the Russell 2000. You'll see that markets are not performing well. A selection of stocks are, and if you've been in those, you have a very different perspective to everybody else.
I never thought about inflation prior to learning about Bitcoin. I recognized it. I saw it because houses were going up and everybody's stock portfolios were going up. But I have to tell you, I come from a family who were not sophisticated investors. They are first generation immigrants. They saved in, unfortunately, cash and a little bit of gold because my parents grew up under communism, so in Poland. Right. So they actually were very passionate about gold. But other than that, I mean, they didn't trust the stock market, and that's where a lot of the gains were. And so unfortunately, I didn't have that financial education from my family. But then you look at school, I always, I was a very good student, and I was rigorous in terms of my homework and studies, but I never learned how the financial system works. And it's hard not to come to this point where you actually do learn about it and you learn about the different economic theories and think, is there some sort of conspiracy to make sure that people don't understand how the underlying system works? Because there has to be a reason why capital tends to pool with a very few amount of people, and the majority of the public, who I think are actually comprised of very good people who are just trying to take care of their families and plan for their futures. They're completely in the dark about how this whole thing works.
Look, it's true. It's so true. basic finance is not taught in schools, alongside an awful lot of other things that would be useful, I think, for kids going into the real world. The reasons for that, we could speculate about a lot, but something you said there, I think, was really important, Natalie, when you talked about, your parents didn't trust the stock market. So let's think about that for a second, because the reason they probably didn't trust the stock market was because they'd seen stock market crashes and they'd seen people get wiped out. And if you go back to the Roaring 1920s, we had a similar set of conditions to those we're seeing today, with crazy amounts of excess and stock markets going to what Irving Fisher termed a permanently high plateau, i.e. they would never fall. And of course they did. And we had the Wall Street crash, and we had the Great Depression, and we had basically a 20-plus year period where equities didn't get back to where they were. So an entire generation's investing career there was obliterated, and nobody wanted to own shares. And so you go through these cycles, and your parents didn't trust the stock market because of what they've seen. There's a generation now who trust in FOMO and trust in buying the dip and trusting in the Fed having your back because that's what they've seen. And ultimately, once you learn to trust the system the way you always expect it to be, you will get blindsided when reality restores itself. And neither of those periods were real. The Roaring 20s weren't real. What we're seeing now isn't real. And ultimately, reality will reassert itself. And that will be a massive shock and a massive wake up for an awful lot of people. And both they and, depending on the stage of life they're at when it happens, their kids who see their parents lose their savings and lose their house and lose their job will also similarly be scared off stocks and bonds. And we will see this again. And it's unfortunate, but it's just the way these things work. Human nature is what it is, and we live a cyclical existence. So, it's a shame, but it's the reality. And you just have to look at AMC. I'm fascinated by AMC. We saw what happened in the middle of that FOMO COVID-fueled mania. We saw what happened with the stock. The stock is now basically worthless. It's trading below $3 a share, I think. And the CEO of the company, Adam Aron, who has done things that were, let's call them essential to keep the company alive. Were they ethical? Were they moral? I don't think so in any way, shape, or form. Were they legal? Barely. But he has used the system to screw people out of their savings. There's no two ways about that. And yet, unfortunately, because of what you talked about, this lack of sophistication, this lack of understanding, there are still, he tweeted today that the AMC earnings call is out. I think it's this week, or maybe Monday, or maybe it's either after hours today or early next week. And he said, there's a lot I want to say, but I'm going to save it for the earnings call. And I looked at the replies to this, and all of the replies have some kind of cartoon ape in their bio, talking about, thank you, Adam, you're fighting the good fight, you're sticking it to the shorts on Wall Street. There's all kinds of shenanigans going on, and the stock's down here because of evil shorts. And once that gets unwound, and it honestly, it breaks my heart. I feel genuinely so bad for these people because they are getting fleeced. They don't realize it, but they're getting fleeced. And every time I express my disappointment, my sadness for them, I get attacked for being, a Wall Street shill, which is fine. I get it. But it comes back to what you said. It's a basic lack of understanding of how the financial system works, and a lack of appreciation that you are entering an arena where you are going to do battle with people who understand every single rule of the game and know how to weaponize those rules to extract the maximum benefit from them. And who they extract that benefit from, they care not. And so, there are always, unfortunately, suckers at the poker table. And we're seeing this now. And, that basic financial education you talked about needs to be a lot more than basic if you are going to go into the ring and give your money to the Adam Arons of the world and watch them use the system the way they have to extend the life of the company, extend their own options packages, and take money from an unsuspecting public.
Well, you made me think of something. I mean, I think there's so much anger right now about the wealth concentration, and people are complaining about the massive gap between, say, executive pay and the average worker. And
Yeah.
when you look at like how the system is designed, I mean, when you can manipulate the unit at the base of that and you can artificially lower interest rates and make for cheap money, I think that that creates the incentive to, I mean, basically consolidate capital, right? And you have these mass corporations. And so you have mass food, mass healthcare, mass whatever that doesn't ultimately serve the customer anymore. And I always think about this when I'm flying, because these airlines, it's like the quality of the service you're getting
Yeah.
deteriorates. And no one's protesting out in the streets about it, right? But I mean, meanwhile, the executives are taking home a $40 million a year paycheck, but you get like a bag of pretzels and half the planes don't work, and your flight's probably canceled because some issue happened with the plane. It's like, how did we get here? And how do you explain that to maybe the average person, where the companies are just buying back shares and allowing for cheap money to facilitate basically this fake stock price that's not based on fundamentals and earnings. And meanwhile, the actual service or good they provide is getting worse and worse and worse. And then you have the administration saying, hey, it's the greedy company. They're responsible for, making your product smaller than it should be, shrinkflation, da, da, da. It's like, how do you explain what's actually happening?
Well, I mean, there's multiple things to explain there, but the sad thing is I come down to, one of Charlie Munger's famous sayings. And he said, show me the incentives and I'll show you the outcome.
Yeah.
And that is not a comment on investing per se. It's a comment on human nature. And he's absolutely right. So let's talk about those incentives for a second, right? We've enabled this. Our fixation with the stock price, right? The price of the stock is what's enabled this. As soon as it became about the stock price, and we all had these things in our pockets that we could check the stock price 20 times a day and stay in touch with the stock price. And it stopped being about the quality of the business. And we stopped thinking like owners and we started thinking like renters, i.e. I'm going to buy this share at 100 because I think it's going to 200 and I can flip it. Yeah. You're not owning the business. You don't care what the company's doing. You just want the stock price to go up.
Great point.
Once we made that our focus, it incentivized the stewards of the company, the board, the chairman, the CEO, whatever, to focus on the stock price. What do we do to get the stock price up? And once you focus on the stock price and you realize that their compensation is tied to, guess what, the stock price, you realize that their incentives are nothing more than, how do I get the stock price higher? What do I need to do to get the stock price higher?
Yep.
Because I'm incentivized by that. The higher the price goes, the better my options are, the bigger my pay packet is. Investors only want the stock price up. So that's alignment for the time being, until you realize that the only way to get the stock price up, or rather when you run out of ways to do it, you do start cutting costs, increasing margins, taking it out of the customer's pocket, making the service worse, all in an effort to get the stock price higher. Mm-hmm. So we have enabled that. The system hasn't, there's no checks and balances to that. Yeah. And so companies are free to pay whatever they want. We've just seen actually the first interesting sign of a pushback with Kathleen McCormick striking down Elon Musk's pay deal, obviously, in the Delaware Chancery Court. So that's very interesting. It's the first time we've seen a judge say, even though you got shareholder approval for this, you didn't give them all the information they needed, therefore it's not valid. I suspect we might see more lawsuits like that being brought against companies whose CEOs and leaders have outsized pay packets. So that's a big part of this. And look, we have to accept our culpability. We have to accept that when we decided that we wanted to rent everything and not own it, we set in motion the seeds of our own demise, and that's unfortunate. But as I say, everything's cyclical, and this will get redressed. We're seeing it now. To your point, the outrage about the wealth gap is the starting point, right? And people will start to get angry. When they get angry, they'll want to understand, and when they understand, they'll realize this is actually very simple. We don't want this to be all about the share price. We want this to be about the quality of the business. And the first way we can increase the quality of the business is to take money out of the CEO's pocket. You don't need $100 million for doing your job this year. You don't deserve it. All you've done is get the stock price up. You haven't made the business any better. Yeah. So that's the kind of pendulum. That's where we go back to. But unfortunately, it's gonna take a while, and it's gonna take some pain, and it's gonna take a lot of corporate conflict, and a lot of people's 401ks losing value. That's just the way this is going to have to go, unfortunately.
You brought up some really great points. I love your renters owners analogy. That's fantastic. Before we start to wrap up, I want to get philosophical for a moment. Should people have a choice in what money they use? Can it emerge from the market, or does it have to be this top-down phenomenon where only if the government says this is money, then it's money?
Yeah, look, you use the word should, and the answer to that, of course, is yes. Of course they should. The people should have that choice. But unfortunately, the power that controlling the money gives the government, and don't forget, its only income is through taxation. It doesn't get money any other way. So they have to, unless people want to donate it to the government, which I think is unlikely. So they have to maintain control of money. They have to maintain control of that in order to maintain their control. This is why revolutions are fought, for this precise issue. So the public should absolutely have a choice of money, but as soon as the government allows options in that, people will choose the best money, and I guarantee you it won't be government money. Mm-hmm. So they know that as soon as you offer a choice to government money, which is absolutely fated to be the worst kind of money because it has to support government, mm-hmm. You lose the battle. So they will fight that, and they have the power to kill any kind of money. And we saw this in 1933 when they outlawed the ownership of gold,
right? Executive
Order 6102. They did that. They confiscated gold and then basically devalued the dollar by 75%. And it wasn't mm-hmm. really until the 70s and 80s when people were allowed to own gold again. So it's been done before. Yeah. It will be done again. And so, Bitcoin, the advantages and the attributes that Bitcoin have are unfortunately and very deliberately a massive challenge to the government hegemony over the right. issuance of money. And so, this is one of the reasons I'm hesitant to put money into Bitcoin. Not that I don't believe it's a better sort of form of money, not that I don't believe it answers a lot of problems, right. But the fact that it is a huge challenge to the government. I've seen what happened when the government challenged gold, or when gold, challenged the government. I've seen what happened there. I haven't seen that with Bitcoin yet, and I don't want to be owning a whole bunch of it when I find out, just in case. Maybe it is completely robust against the government, but I fear it isn't, and it's not a chance I'm willing to take with my savings.
Well, that's really interesting you bring that up, because I would say that gold's Achilles heel and what allowed government to be able to do that is its physicality, right? And so a lot of it was centralized into central bank reserves, and countries were able to kind of take control over it, and you could paper over it very easily without the ability for every individual to audit, say, even a retail bank's reserves. Whereas Bitcoin, being digital and being a ledger that anyone can download and be able to see every transaction in real time, I mean, I really think it's aiming to solve that very problem. And now we're seeing actually Wall Street regulators legitimize it. I mean, the SEC has come out and said it is the one commodity. We now have Wall Street firms that have spot Bitcoin ETFs. And I know the spot Bitcoin ETFs are a little bit different, but I think the underlying question is also, why does every transaction have to move through a government entity or a corporate entity, right? Why can't we have what we did essentially with cash, where we don't have to trust any individual? It's a bearer instrument. And now technology has empowered that to happen on this network. So I mean, what would get you to say, I mean, you said you're obviously open to it. So what would get you to say, hey, Bitcoin actually does have a bedrock under it, and I think that maybe even a little bit I'm going to allocate in this direction?
Look, for me, it's time spent understanding it. And, I'm time poor, and I've just decided that the amount of time it feels to me that I would need to dedicate to get comfortable, understand it, I don't have that time right now, and maybe I will in the future. As I say, I'm not a Bitcoin hater. Mm-hmm. I just find for me right now, it's just not suitable. And at some point, I may change that. I absolutely may. And if I believe in changing my mind, I have no problem at all doing that. I'm not stuck in some kind of dogmatic world where I refuse to entertain it at all. Yeah. But it's interesting, what you said there about cash being a bearer instrument. again, there are reasons. Bitcoin's interesting. The reason Bitcoin came about when it did was a solution to a problem with money, a problem with government, a problem with indebtedness, a problem with all those things that Bitcoin set out to create a solution to. There's a reason it didn't come 20, 30 years earlier, because we didn't have those problems. So cash was king and you could move cash around. The reason why cash is being outlawed now is because it presents a problem to the government, right? They are so indebted, and they do need to take a little vig off every transaction in the system. So they need to try and outlaw cash so they can do that. Yeah. That's why these things happen when they do. It's not coincidence. Bitcoin cash was a solution to a problem that didn't exist. So it was fine. Everybody can have cash, no problem at all. We don't need to rein that in. As governments got more and more indebted and they realized that cash was a leakage in the system that they couldn't afford to look past anymore, they started looking at ways to shut that leakage down. Hey presto, here comes Bitcoin. And Bitcoin gives you that ability. So Bitcoin is de facto a problem for the government. Now, we watch hearings all day long and people pro and anti, but ultimately, whether you're pro-Bitcoin or anti-Bitcoin, whether you believe the government are softening or they're not softening, the ultimate problem you identified 10 minutes ago in this conversation, it's competing money. And that is a problem for a government. Right. Now, gold, we saw that was a problem, and it was resolved by it being confiscated. Since then, obviously, the difference now with gold, having been through that cycle, is a lot of people, Americans, will hold their gold in Singapore or in Hong Kong or in Switzerland or overseas. They'll hold it somewhere where, look, if push comes to shove, when the government outlawed the ownership of gold, not every citizen turned their gold in. Right? I guarantee you, not every citizen did. A lot of law-abiding citizens will do that. But if you own gold, you're an American citizen, you own gold in a safety deposit box in Singapore, and the government says, turn your gold in, you at least have an option. You may decide, you know what, this is a capricious government. I'm not turning my gold in. And they can't take it from you. You can't send American troops to Singapore.
Right.
This is why FATCA was put in place, right? To make sure we understand everything you own all around the world so we can actually come after you. But if it happens, having seen 61, so you have a choice to make. The problem I see with Bitcoin, and I can take my gold in Singapore down to a market and exchange it for cash any day of the week. I'll get spot for it with a dealer in Singapore or wherever else I hold it. The problem I see with Bitcoin, and I'm sure people in the comments and in my inbox will disavow me with this notion, that's fine. I profess to have not done as much work as I need to if I really want to dig into it, is that if you control the off-ramps, if I'm controlling Bitcoin, if you're Bitcoin to Bitcoin, do whatever you want. But as soon as you want to come into the fiat world, to your point, I want to know every transaction, I want to know what's happening, then I don't see how you have a choice. You can keep your Bitcoin on a ledger, but on a cold storage. But as you say, every transaction is traceable. And so ultimately, I don't see that there is a way to opt out if you choose to not obey a confiscation order or not obey this or not obey that. I don't see how easy it is to do that. And I'm choosing my words very carefully because I realize I'm talking from a position of intellectual weakness on this. But I find the whole thing fascinating, and I, as I said, I completely understand why people own it. I think it's the solution to a lot of problems, but I think it's also an enormous challenge to the thing that the government not only want challenge the least, but it's currently their biggest Achilles heel because they are so broke and so in debt, and Bitcoin is a massive challenge to that.
Right. They need to be able to tax. That's why they want to surveil. It is really interesting to hear your hesitancy and reluctance, because I think that there are people, including Bitcoiners, who are worried there could be another executive order 6102. Or, I mean, if you look at the attacks they're making on things like coin mixers, right, just for privacy tools so that people don't have all their transactions and their balances out there for someone to track down. It is going to be really interesting. I do think that there are headwinds, but I also think the forces of freedom do tend to win out. We saw battles when it came to early encryption, when the internet was first starting to take hold, and obviously the public won because code is free speech. So I'm very, very hopeful. And I love the fact that being that it is borderless and global, we've never had something where literally you could take your entire wealth with you. And if your government really does go to hell and they want to take everything from you, you have the optionality to take everything, all of your property. You can memorize it in 12 words or take it on a small hard drive and flee the country in a way that people never could before when they had oppressive government. So I see a lot of hope in it. We could get into probably an hour-long conversation. I know we don't have the time, but just to wrap up, any final thoughts? What do you want to leave people with? And is there anything that you wish more people thought or talked about right now, given everything that's going on in the world?
Look, I think it comes back to what we've been talking about here, right? We don't know. We don't know anything about the future. And so getting too dogmatic about how you think the future is going to play out is a really dangerous thing to do. And at the stage of the cycle we're in now, being dogmatically optimistic is even more dangerous than being dogmatically pessimistic, because the system is so broken and the jeopardy is so large, both for governments and for those of us who live under them, that assuming everything's going to be okay and assuming, we'll get through this without any real pain and the government will bail us out and they'll cut rates and everything will be fine. Making those assumptions at this point, I think, is much more dangerous than being acutely aware of the risks involved of getting it wrong. And, look, it's been that way for a while. It's been that way for a handful of years now, that the risks have been getting bigger. And people will point to the stock market being at all-time highs and say, if you've been worried about risk, then you've missed out on all this. And that's fine, right? If your risk appetite is to hell with it, YOLO, that's absolutely fine. But if your risk approach is, okay, I have been in the stock market for the last 15 years and I got rich because I was in the stock market, I don't want to give that back, because giving it back is the biggest sin of all. If you've managed to make money in the markets, giving it back is just unthinkable. And there's a great line in Wall Street. Everybody always pulls out the greed is good line, but there was a line towards the end when Daryl Hannah says to Charlie Sheen, he says, having money and losing it is worse than never having had it at all. And she's absolutely right.
Yeah.
And so that's what I would say. Be aware that the risks are getting bigger every day. Be aware that you have to be on top of things and you have to appreciate those risks, and then, invest accordingly. If you've got a massive risk tolerance, go for your life. But if you're cautious, then you need to rethink the YOLO buy the dip mentality that's worked so well for such a long time.
I love that advice. It's been so great talking to you. I could talk to you for hours more. It was so nice to meet you in person. Thank you so much for all you do. I love your work, love your show. I will link to it in the show notes, and hopefully we'll do this again soon.
I'd love that. Thanks, Natalie. It was great having you. Thank you.
Thank you so much for checking out this episode of the Coin Stories podcast, brought to you by Bitdeer. Make sure you're subscribed so you don't miss out on any new content. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open if you want to share feedback or guest suggestions. You can reach me at Natalie@talkingbitcoin.com. I'll see you next time.